So thank you. So welcome to Buying and Selling in 2023. I am Melise Hoss with Hoss Group Realty, and we have Sam Elder here. He is a mortgage loan originator with First United Bank. Hello, Sam. So highlights, we are going to go over a little bit about each of us, qualifying for a loan, the different loan programs, the current lending environment, why it's a great idea to still jump in the market today, how the inventory is looking, a special program we're involved with called Homeward, and then our contact information, of course, at the end. So we'll dive in with a little bit about us. I am Melise Hoss, and I have been in the real estate business for 15 years. I started in actually 16 now. I started in new construction sales, and I did that for 7 years before I switched over to the real estate world. I began on a real estate team and kind of learned the ropes that way. And then in December of 2019, I started my own team. And from there, we have grown. We have 7 agents on our team now. And then we have a director of operations currently, who is Maya Beeson. She is also on here, and we'll be taking and answering questions as we go. We work in new construction a lot still. We work in resale. We work all over DFW. That includes Fort Worth. We do a lot in both areas, especially with our new construction partners. So we can help you in generally any market that you're looking to buy in this area. And that's about it for us. I'll hand it over to you, Sam.
Thank you. My name is Sam Elder. I'm a loan originator at First United Bank. We are one of the top 5 mortgage lenders in the Dallas market. We are based in Durant, Oklahoma. We cover all of Oklahoma. We're the #1 lender in Austin, so we cover a big majority of Texas as well. My career has run alongside Melise's. She is one of the very first people that I had the opportunity to work with. It continues to be an honor and a tremendous blessing to be able to have these opportunities, to meet with her clients, to meet with people that she brings to me to walk them through the mortgage process. I love what I do, and it's been very rewarding. And to that point, I appreciate everyone's time today. Thank you guys for carving time out of your day. I know that things get busy. You got a lot on your plate, maybe tonight, both literally and figuratively. So thank you guys for setting aside that time. And I hope I can give you information that will make this process easier, make it more financially rewarding, and do my part to help you from start to finish. So thank you.
Thank you, Sam. Awesome. Okay, so we'll start from the top. So let's talk about qualifying and everything that goes into that aspect of the process.
Sure. Yeah, it's incredibly easy. So despite what you might have heard, despite what you could possibly even have experienced, qualifying for a mortgage comes down to 3 things, and it's very straightforward. Assets, income, credit scores. Those are the 3 things we look at, depending on how a borrower or borrowers are in each of those areas. There's literally a program for everybody. So starting at the top on credit score, as a lender, we're trying to figure out, do you have a track record of being responsible with your finances? Do you pay your bills? We look at scores from all 3 credit bureaus, Equifax, TransUnion, Experian. They use a special mortgage scoring model. So what you see on Credit Karma, what you see through your bank, those scores could be different. But when we pull the 3 mortgage scores, we take the middle score there. And that's a big portion of the loan process for us. We can go, you can get down payment assistance loans down as low as 620 on credit. Scores go, up to the 800s. So there's a lot of room in there for different programs. And again, depending on how people fit with regard to credit score, different programs available. We can walk through that with you. We had someone as recently as this week, they had scores in the mid 500s. They had a single credit card with a low credit limit. She paid it down to just under $10, and her scores went up to above 640. Her and her husband are on the path of getting a VA loan now.
That's amazing.
Something so small can make such a huge difference, but credit is a big part of what we do. Don't let that scare you away, though. If you have credit issues, man, a lot of us do. We can walk through that with you. Happy to do that. The next piece is income. Income, we're specifically looking at a debt to income ratio. That measures your monthly responsibilities as far as your car payment, if you have student loans, if you have credit card debt, any of your monthly obligations that pull through on credit. So not your gym membership, nothing like that, but it's a measure of your income versus your debts. It's called a debt to income ratio. It includes a forward mortgage payment in there. It needs to be, depending on the program, 45% to 55% or less. And that's what we're looking for on the income side. Assets, that's money for down payment and closing cost. You need money to buy a home. However, just like with everything else, we can work through that. Some of that could be your own funds. It could be gift funds from family. It could be down payment assistance from a state agency in Texas, 401k loans. Don't let the money part scare you away either, right? And so the concerns that people most often have are, hey, my credit's not great. Medical collections, that type of stuff, or hey, I don't have a lot of money for this purchase process. Don't say no to yourself before you've gone through the process to see what we can do for you. Again, there's literally a program for everybody. We just have to see how you fit in each of those buckets.
That's awesome. Back to income real quick. Did you talk about job history at all? I might have missed it.
And so we need to meet a threshold on the lending side. It's called stable and predictable. If you have salary, then that's 100% usable income. If you're self-employed, it could be a little bit more tricky. So in certain situations, we might need a 2-year history. In other situations, somebody could be on the job one day or might not even start the job until 30 days into the future. So again, everything's a little bit situation specific. Don't be discouraged by what you've heard. If you haven't been at your job for 2 years, that may not matter.
It's amazing because things have changed so much. And so people are used to the old rules and the old way of doing things. And there's just so many more options now that make it easier for everybody. That's great. Thank you.
Yeah, of course. And that's a perfect example where people's perceptions can become their reality, and what they hear at work from their coworker may not be exactly correct. It could have been correct 5 or 10 years ago, but it may not be correct now. Right. So always best at the start of the process, talk to a lender, say, hey, here's my situation. That way you're getting situation specific information for you so that you understand what your path forward looks like. That's not being conflated with what somebody else's situation could be. The person sitting next to you, your coworker at work, could have a completely different set of guidelines that they're having to adhere to because of their spouse's job or anything else. So always best to talk to someone who can walk you through that.
Right. And also not parents who haven't bought since 30 years ago and things have changed dramatically.
They love to help, but they may not be giving you the best information.
Them, but at the same time, I love that. Thank you so much. Okay. Well, any questions on that? I didn't look at the chat box. I guess I can text. Let's see. Katie said, what is the truth about medical bills on your debt to income?
Yeah, and that's another situation specific. In most instances, the collections can be excluded. In some instances, though, they're going to have a negative impact on your credit. There has been a transition over the last year or two for the credit reporting agencies to start down the path of removing paid collections, but don't assume that that's the case for all of them. There are very specific rules for that. Medical collections can trip you up, but they don't have to, right? If they're affecting your credit in the short term, and there's loan programs that you can work with now that you may not use later and vice versa. So medical collections can be a little bit tricky. That's the most common thing that we see on credit in terms of negative things, but it should not, by itself, it should not preclude you from being able to purchase a home.
Great. Okay. Thank you. Awesome. Hear a lot about that. All right. Programs. Let me move this out of the way. Okay, how about, we'll go down here. Okay, so we've got a few different programs here. You want to walk us through each of these a little bit?
Yeah, and again, going back just briefly, depending on how you fit in each of the 3 areas, assets, income, credit scores, there's literally a program for everyone. Great credit, not so great credit. Lots of money, not a lot of money. One of the programs that people ask about most frequently is the first-time homebuyer programs. Generally, first-time homebuyers need what? They need something that can accommodate not so perfect credit. Maybe they haven't established their credit yet. Maybe they have a couple of, hey man, I'm just trying to figure out the ropes on this, blemishes on their credit. And then the other thing that first-time homebuyer programs do is address I don't have a ton of money yet. So with first-time homebuyer programs, generally you can put less down, as little as 3%. Maybe on FHA, you can have credit in the low 600s. But in either of those situations, even if you're just putting 3% down, even if you have low credit, you still might have access to state funds for that. We'll get to the Texas Heroes programs later, but generally the first-time homebuyer programs, there are multiple different options, and they're trying to address people in that demographic, giving them access to home ownership through addressing the things that are most common to them.
Yeah.
Then at the other end of the
Challenges.
spectrum, your well-qualified conventional buyers, people assume, and a lot of people that talk to their parents assume, that you have to have 20% to put down. A well-qualified conventional buyer could very well be putting 3% down, right? And so don't assume that you have to have 20% to get the best terms available. In fact, by putting 10% down or even 15% down, you might already have access to the best terms. That said, the more you put down, the higher the credit, generally speaking, the better your terms are going to be. But, it's still situation specific. It's good to figure out what your options are and see those options one next to each other so that you can visually compare and see what works best. We are also, as a community bank, we're focused on obviously our community. The veterans in our community is a perfect example of that. Right now, we do not have lender fees on our VA loans.
Amazing.
A VA loan is one of the best vehicles people have for getting into a home. They're for veterans and their spouses. They're able to do as little as 0% down, not have mortgage insurance. And so again, it's a great tool if that's something that applies to your situation. Physician loans, you can do 0% down on a doctor loan program. I can walk through specifics with you on that. But again, we're trying to find different programs for different people that have different needs and address those. Someone just coming out of med school, man, they may not have the money to put down just because they're a doctor, just because they have, that designation doesn't mean they've got all the money in the world.
Right.
And then, lastly, we had put on here our Texas Heroes program. There's a slide, I think, after this for that.
Yeah.
Man, this is such a wonderful a tool. You can get money from the state, 3%, 4%, up to 5%, based on the loan amount that goes toward the down payment, that goes toward the closing cost. And that's huge. That takes so many people, 2 or 3 people every month. We're helping with this that can go from completely unable to buy a house to now they're absolutely able to buy a house. Free money from the state. I mean, there's always going to be strings attached. You may need to stay, depending on the program, you may need to stay in the home for 3 years. You may need to make below a certain amount, but the bar is not incredibly high for that. And it's a wonderful tool to take people from renting and make them homeowners. And, the state agencies that lean into that, we partner with them to make that a reality for everybody. So those are just a handful of the examples. But again, it's a very broad offering in terms of what can we find for you, give you options, show you what those options are, explain them so that you can make a decision about what works best for your specific situation so that we can get you into a home.
I love it. That's amazing. So many options. Okay. All right. Let's talk about the current lending environment. Is it doomsday out there? Is the sky falling?
Yeah, and you could be led to believe that. Absolutely. And there's a recency bias. Everyone that presumably everyone that's in a home that didn't buy in the last 6 to 12 months, they've got a rate in the 3s, they've got a rate in the 4s. And so on a relative basis, they think, oh my gosh, rates are incredibly high. And we can go into some of the most common objections that we hear from people, but the reality is, because of inflation, rates are higher. That does not mean that it is completely cooled off in the housing market. Find a home that you love, work with us, both on the realtor side and the lender side, to negotiate terms that work for your specific situation. And then, do that at a price that makes sense in a budget that you're comfortable with, leave a safety net for yourself, and you don't need to worry about, the noise in the background. There are a lot of options. I went on to say in this next paragraph, there are so many different options for getting payments lower now, for getting payments lower forever, for getting payments lower for the next seven years. Seller paid temporary buy downs, buyer paid permanent buy downs, adjustable rate mortgages. We're offering now to refinance people with no lender fees in the first 3 years, because
That's huge too. That's
is.
amazing. Yeah.
It is. Although we don't know where rates are going to go, we know that should lower rates present themselves, we want to be the first ones in line to present you with the opportunity to take advantage of that. Either get a lower payment, shorten the loan term, some combination of both. But all of those tools will help people transition from not owning a home to owning a home. Maybe you own a home presently and you want to family has changed, your needs have changed. Maybe you need to get a bigger home. Maybe you need to downsize, kids have gone to school. So many different things for so many people. Just because rates are higher doesn't mean that you can't pursue that in the present moment.
Right. And people also, there's a lot of misinformation about house prices coming down. And that's just not the case in DFW. We've never seen a significant drop. Even in 2007, 2008, we didn't see it. I mean, we're still, even in the worst parts of DFW, not worst parts, but the lower appreciating parts, I should say, of DFW are still appreciating at 5 to 7% year over year. So with some pockets being upwards of 20%. So, and to this moment, we're seeing multiple offer situations. So the idea of waiting for prices or rates to come down when there's absolutely no indication of that happening anytime soon. In fact, quite the opposite. There is promise of rates possibly going up, and the data is there that home prices are going to continue to rise. So by waiting, you're going to end up paying more, unfortunately. So it's just like you said, it's just getting the messaging out there that you have options.
Yeah, and here's the thing. I think it's important to take this opportunity and explain to everyone the importance of having a good team. So the information that you're getting from Elise is spot on. She understands that part of the transaction. She can help, her team can help. She's got incredible people that work for her. But it's important that you have that person on the realtor side. It's important that you have that person on the lending side, because the things that I don't know or don't have expertise in, she does, her team does. They can work through that part of it. They can come back to me and say, hey, we found a home. The seller has a little bit of wiggle room. How can we best allocate those dollars? Should we do a seller paid temporary buy down? Man, great. So for the first year, your payment's lower. For the second year, your payment's lower. Maybe that's the best tool for you. We can discuss that. I understand your situation financially. She understands your situation on different levels. But then also, us being able to work together to help you get down that path is a critical part of the home buying process. We would be remiss if we didn't say all these things are important, but being represented on both sides of it with the lender, with the realtor, man, that may be more important than anything else combined.
Well, yeah, you absolutely want to work with someone who's been through multiple shifting markets and who has seen the upsides and the downsides, and who's a local expert who knows the DFW market like the back of their hand and has been through all of that. That definitely gives you a leg up when the market is so saturated with competition and realtors and lenders galore. It's important to find someone who not only cares about what you want, but has the knowledge and the expertise to get you there in the market you're looking. So yeah, thank you for that. That's exactly right.
Of course.
All right, let's see. So let's talk more about why today is good.
Yeah, and so when we were preparing for this, we tried to.
Oh, I'm sorry, Sam. Hang on 1 second. I think we might have a question I might have missed. Can mortgage rates be locked until closing? In this market, it seems like rates could change a lot between when you find a home versus when you close on the home. Great question.
No, that is a great question. In most situations, and there are man, there are so many different things that different lenders are rolling out, some of which are going to seem a little bit gimmicky, but they're trying to address a volatile rate environment with rates going up. The most common practice is that the second you have an executed contract, the lender can get the rate locked in then. It's a little bit different on new construction, different times, require different things, but by and large, you can get a rate locked in for 30 days, 45 days, 60 days, however long your closing is, you can lock that in at the beginning. The downside risk there is that rates could actually go down. Now, if they go down significantly, First United, other lenders, they're going to offer you the ability to float down one time. You have to meet certain, conditions in that, but it makes sense from the day one of being under contract to get the rate locked in, to take that off the table so you don't have to worry about the rest of the way through. And you can do that from the start all the way through to the end. Yes.
Love that. That's great. Zach, let us know if that clears it up or if you have any other questions. Okay, great. So back to today. Yeah.
And so when we were kind of working through this and saying, hey, what are the most common things that people say, that people think, that the questions that they have? In answering these, they're really, sound answers. I don't want this to come across as gimmicky or salesman-y.
Right.
It's the reality of the situation. And so, the very first thing, hey man, I'm going to wait till rates come down. Like they've got it figured out. Like, okay, here's where we are now. My plan is to wait till rates come down. Well, if everybody's waiting till rates come down, it becomes, a little bit chaotic when rates do come down, if they do come down. If you're sitting on the sidelines and they don't come down, you're getting further behind in the process. If you purchase now, right, and again, don't want this to be gimmicky at all. This is the sound logic behind this. But if you purchase now and rates go up, you purchased at a good time. You're in a 30-year fixed rate mortgage. Your payment is not going to increase through the process unless your insurance changes or property taxes change. But you've got a fixed 30-year payment. As your income increases, your payment's staying the same. So you've done the correct thing. If rates come down, we've already said we'll do a no closing cost refinance within the first year. We'll cover the lender fees. For that, we want you to be in that lower rate, right? So either way, hey, I'm going to wait for the rates to come down. Well, if they don't, then you should have bought earlier. If they do,
and sales prices have gone up and you're paying more, right?
Yeah, and I think it's the same thing on the next one for waiting for the prices to crater. You said earlier in Dallas, man, they're not. And so
it's just not our market. We have
it's not. There's so many people coming here. Yeah, there's so many people coming here. The joke, it's not even a joke. It's the reality that they ran out of U-Hauls from California coming to Texas.
Yeah.
People want to be here. And so we're going to be insulated from a market, quote unquote, crash that I don't know that we're going to see. But, a lot of that in other markets in other states is built in a little bit already. But in 2008, Texas was completely insulated from that, what they had in Nevada, what they had in Michigan, what they had in California. And the same is going to be true now. So many people are coming here. So many people have been wanting to buy, haven't been able to buy. The timing wasn't right. And so I don't think the low prices I don't think the crater scenario is coming. Yeah. So, if you're waiting on that, it's a little bit of a fool's errand.
Yeah, unfortunately. Yeah.
Waiting for more money. Again, if the plan is to, and I'll take a step backwards and reiterate what I said, the more money you have in the process, the better it's going to be, the better your terms are. But that does not mean that you don't have enough money already, that you can't get extremely good loan terms now, that you don't have access to money from the state, that you don't have other vehicles so that you can purchase now, so that you're not waiting for rates to come down, so that you're not waiting for prices to crater. Most people, you probably have more money than you realize, either on your own or through other channels, through the state, through a state agency. So waiting for more money could cost you more in the long term if prices go up from here. I mean, we don't have to see a lot of things go right for prices to be higher, next year, 2 years, 3 years from now. And so at that point, you're going to need more. So you're continually kind of chasing behind what you perceive to be the amount that you need, and you're, just getting further behind instead of getting caught up.
Mhm. Yeah.
And then, waiting for better credit. And that's another thing. There are programs for everybody. You could get into a home now with the credit that you have. FHA this week announced last week, this week, they announced that they're lowering the cost of their mortgage insurance. In a lot of situations, you can get better terms through FHA than you can through conventional. And again, that's going to be for certain buyers, but somebody in your 640, 660, 680, even 700, possibly even 720 credit could be getting lower cost mortgage insurance with a minimum down payment through FHA than you're afforded through conventional.
Wow.
So
That's
we're back
amazing.
to
That's new.
FHA
Yeah.
being a good loan program with lower cost mortgage insurance than a lot of the conventional programs, fulfilling its design. HUD came out with FHA to meet the needs of people who don't have perfect credit, who don't have tons of money for down payment. We can partner with TSAHC, offer funds for someone on an FHA loan to where they're bringing us a very small percent, and that almost answers all of those things. So, waiting generally is not going to be the answer. Not trying to be gimmicky. I'm trying to help walk through this with you so that you can say, okay, what is it that I'm waiting for? Because today may be, the better option than next year this time.
Than what you think. Yeah, absolutely. Okay. Okay, so I'll talk a little bit about today's current inventory. So if you've been watching our updates weekly, then you know the numbers have been steadily creeping up. We definitely are running still low on inventory, but one thing that Haas Group likes to share with their clients is that there is a lot of hidden inventory that you're not seeing on MLS and Zillow. So sometimes builders and custom builders don't always list their properties for sale on MLS. So if you're only accessing MLS to look at properties, you could potentially be missing out on homes that fit your criteria just simply because they're not on the MLS. So it is really critical to work with someone who has a foothold in all the different markets available to you. New construction is something that is overlooked a lot because a lot of people think, oh, it's a brand new home. I probably can't afford a brand new home, but that is simply not the case. To your point, Sam, as you were discussing, there's so many options, and builders are offering extreme incentives right now to where some clients are coming to closing with very, very little out of pocket. So it's definitely a viable option. Of course, it has to be in an area that you're looking and needs to make sense. But as you can see, our inventory is still very low. So it's important to know that there are additional options out there for you if you are working with someone who is able to access that. You have anything to add on inventory, Sam?
No, and I think you hit on the very important parts. There is a little bit of a perception among sellers like, oh my gosh, I don't want to sell my home. And that's something that people are warming up to. Their life changes, their jobs change. People are starting to sell, but a lot of the inventory is coming from new builders. There are a lot of great deals to be had. And again, important to partner with the right agent that has those relationships that can flush out all those discounts for you, because they are, in certain instances there, but in certain instances, KHO raised prices in the fourth quarter in several of their markets, right? So find someone that is going to be able to walk you through that, and that's why there's such a valuable service provided by Melissa and her team.
Oh, thank you. Well, yeah, it's just there's so much information out there, and a lot of it's out of date. Like if you're looking at Zillow, Realtor.com and things like that, they're great, but how they just tend to be a couple weeks out of date. So you could be looking at properties that have been sold for a couple weeks simply because there's a lag in updates. So it can be a little maddening, but whenever you're ready, just make sure you're working with someone who knows your market well. Okay, so then we're going to talk a little bit about Homeward, and I know what you're thinking. Isn't Homeward a different mortgage company and you're on here with a lender? What's wrong with you, lady? But on the contrary, you can actually use both. So you can use Homeward and still close with Sam, which is awesome. Homeward is simply a cash enabled lender. So this is an additional option that is especially valuable for sellers. So I'll kind of talk a little bit about the buy before you sell program real quickly, because it kind of covers the cash portion as well. So let me open that up for us real quick. So this is how buy before you sell works. Essentially, Homeward does a qualification process with you, just like Sam will do, and then they will approve you to use their cash. Then what you can do is we can go to work, start and find your new home. First, you find your new home, Homeward buys that home for cash, and then you can then move into that home. And we can then list your current home for sale. So you don't have to worry about showings. You don't have to worry about ever having two mortgages or moving twice. It's a simple, you're using their cash to close on it. And then once your home sells, then you close on the new home through your lender. So there is a small fee. There's a 1.9% convenience fee that is rolled into the sales price of the new home. But what we have found is that by leveraging Homeward's cash, you also tend to get 2 to 4% off the sales price of the home you're making an offer on, because you have cash and none of those contingencies that go along with it. So we find that just right there, that generally covers the cost of the convenience fee. And then there is a carrying cost that you pay while you're living in the home. So you simply pay Homeward back their carrying cost of holding the home while you live on it, while you live in it when you close. So you don't pay anything at all out of pocket until your existing home closes, and you have 6 months for that to sell. So Homeward offers you upfront, once you go through the qualification process, they also offer you a floor price guarantee. So you're starting off your journey to sell and buy with a guaranteed offer on your property. Now, this isn't going to be a pretty offer. This is a worst case scenario. If in 6 months your home doesn't sell, Homeward will buy it for this amount. So they're therefore adding more certainty that at no point are you ever going to have two mortgages, and you're again not paying anything until you close on your existing home. So it eliminates all risk. It eliminates all stress of selling, of having to deal with showings and people in and out of your house, keeping it clean, storage, all of those things you don't have to mess with if you do this. And you get to use the lender of your choice. So the beautiful thing that we've seen is that Sam is often able to compete with Homeward rates and fees, and is often able to provide a better deal. And Homeward honors those lenders' deals. And so you're still able to use their cash and close with the best terms possible, making it a win-win. You can also, on a separate note, you can also use Homeward if you are wanting to just buy with cash. So let's say you're in the market right now and you are making multiple offers and getting beat up because there's other people using cash. Well, if that's the case, you can do the same thing with Homeward. You can get pre-approved with them, and then once approved, they will make a cash offer on the home that you want to make an offer on your behalf. They can close in as early as 2 weeks. There's no appraisal. There's no contingencies. They do a secret kind of desk appraisal in the option period, so that you still get an appraisal and you'll know what your closing is going to be when you buy it back. But it's for the seller, there is no appraisal. So that makes your offer that much more appealing over any other regular financing offers. And again, we see with cash offers, generally a 2 to 4% savings on sales price. So it's definitely something to keep in your back pocket to use as leverage in this market, because it's a creative tool that not a lot of people are using yet, because as we all know, with humanity and humans, people are afraid of change and afraid of new things. And this isn't the new kid on the block, kind of. It's been around for 4 years, but it's still just not widely spread and used. So we love that we've been kind of on the forefront with this company and this program, because it's allowed us to give our clients so much more options and leverage, and getting them better deals in the marketplace, no matter what their situation is. So this is just an extra little tool that we have here that we use in our partnership with Sam. And it's just a case-by-case basis. And if it fits for you, it fits for you, but it's good to have all of those options. Any questions on that? No? Okay, awesome. Then we'll move on. All right, so that's pretty much all we had for you guys tonight. Here is our contact info, mine and Sam's. I am available. I work all the days, all the hours. So just don't hesitate to reach out if you need anything. We are really grateful and appreciative of all of you guys' time and being here this evening. And we hope it was helpful and informational. And if you have any questions, also, please let us know. Go ahead, Sam.
Yeah, thank you as well from me. We want to give you options, and we want to provide you expertise through the process. Love on you from start to finish. Work with a servant's heart. If we do that, if we can give you options, if we can explain everything to you, you're the most qualified to figure out what works best for you. Whether it's normal lending, whether it's programs through Homeward, there's so many different things. You just need the right team to help navigate this for you. We're not trying to make it a more complicated process by throwing so many things. We just want to help you figure out what your best options are, explain those to you to actually make it a lot easier. So thank you for the time. I appreciate the opportunity to share with you. If you have questions, please don't hesitate to reach out. Otherwise, thank you for giving me the chance to speak to everyone.
Thank you, Sam. Thank you so much for being here. We really appreciate you and your time too. All right, guys.
Thank you, everybody. That was so good.
Thank you, Katie. Thank you guys.
Thank you,
Everyone. Have a
everyone.
great evening.
Thanks,
Thank you,
Melissa, Sam.
Thank
Okay,
you.
Thank you, guys.
Thank
Bye.
Have a good night. Thank you.
You too.
Bye.